Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Cochran, the currency analyst. I just want to say hello to folks. Hi, Blondie, Diep, Hon, Imran, Rico, Van, Williams. Yeah, well done. Could you just all let me know that you can hear me okay? That's always gives me a reassurance that you can hear me. If you could just type in the question box that I'm coming out loud and clear for you all, that's really helpful. And especially if you can't hear me, make sure. Yeah, Neem, thank you very much. I'm glad you can hear me. Oh, that's great. Thanks, Blondie. Good. It's always good to get a reassurance that I can be heard the other side. Right. Welcome to our online trading workshop. Now, just going to run through a few things before we get going today. First of all, just to explain that as I'm going through the market with you during this session, this is not trading advice. So the idea is you don't trade the situations that I give you. Instead, the idea is that I'm providing a framework of education so that you can learn how to make trading decisions for yourself. So just to make that clear, that it's not advice. The other thing to make clear is if you look on your GoToWebinar panel, you should see at the bottom a little tab called Handouts. Okay, now if you click that Handouts arrow, you should see a handout which says Workshop Guide 13th of November. Can you make sure that you can see that? And if you can't see that workshop guide, please let me know in the questions panel. Okay, so when you open that workshop guide, it should it should look a little bit like this. Okay, so you should have today's date, and then you should have the free online trading workshop, and then 3 ways to trade a surprise news release. That is the sort of the extra topic that we'll be covering alongside this framework here. Now, the whole idea of this handout is that it's a framework for you to take away. So we're going to work through it together, a bit like a worked example. And then when you work through this together, you'll take it away and you'll do exactly the same again for yourself when you come to trade tomorrow or the next day or the next week. It's the same kind of principles that we're looking at. So if you like, I'm taking these 5 topics, looking back, looking forward, looking at the charts, looking at your risk, looking at the outcome of your trade, designed as a template for you to use. I hope that should be clear. Make sure you've got the workshop guide. Make sure you've got it nice and open. We will be referring to it during the session. And if you also have your demo account open as well, because during the time we're going to be looking at how to trade a surprise news release, and I'm going to be getting you guys to do some of the work yourself as well. So get you guys to do some practical stuff. And the idea is that this is interactive. So as we're going along, if there's something you don't get, just type it in the question panel and I'll have opportunity to see if I can answer your question and make what needs to be clear for you. So I'll just pop this down here. Get that later. Yes, okay, that's great. There is a reminder of just looking at the session ahead, we've gone through the session, but there's one thing I wanted to say. There is a raffle that takes place every month. And every month, those of you who attend this workshop, and that's all of you who are here, who are hearing me now, you have to attend live. So everyone who's here, Williams, Rico, Natasha, Naeem, Mo, Hon, Diet Biondi, all the others, Adil, all of you guys will be entered into a raffle, and every month the winner of that raffle will receive 1 hour's one-to-one coaching with myself. As I say, you have to have attended a live session, so if you're here today, you can congratulate yourself because you are included in the raffle, and someone who's attended during this month will win a one-to-one coaching session with myself, and I'll be able to find out exactly where you are with your trading, be able to give you some pointers as to where you need to focus on and to help you go up to that next level. The other aspect which I would say, and this is really helpful for you guys, there is, if you want a particular topic covered, say there's an area you really don't understand, or there's something you're really struggling with, or something you just like to find out more about, why don't you email a suggestion for your topic to the workshop? Okay, and you can email it to us here at workshop@hycm.com. Okay, so email us at workshop@hycm.com, and any future topic you'd like to see, just pop it down on the list. It'd be really good to see. Thank you. That's funny, dear. Yeah, nice. Yeah, and feel free to make funny comments in the questions panel as well. We don't want to make this all dry and totally boring at all. So that is what we have coming up ahead. I really want this to be helpful for you. So don't be shy on using the question panel if you have a question. So the next thing for you to do is to open up your worksheet. So again, if you've just joined us later on, go to the handout section, click on workshop guide, and as you click on the workshop guide, your workshop guide should come up and it should look like this. Okay. Make sure you have that. And when you've got that open, also open your demo account, because we will be looking at that later. Okay, we will be looking at the demo account later, and we will be seeing some practical suggestions. I'm going to be putting you through your paces and trying to get you to put some things on the charts and help identify really sensible, good places to take trades from as we look at how to trade a surprise news release. And we have one that's come out just today on some Brexit news, which would have been a perfect candidate. So first of all, we want to look back. That is the first thing we want to do. I'll just close that down there. So as you're coming to the markets each session, this is the very first thing that I do. Before I start looking at the charts, before I start even thinking about trading at all, I want to look back, because the idea about looking back is I want to identify what recent sentiment has there been in the last couple of sessions in the market activity, and can I identify that key market sentiment, and could I summarize it into a sentence or two? Okay, so if I asked you guys, as you're looking back in the market, if you look back in the London session and looking back at the Asian session from overnight, what kind of key things would you say you see in the market? Now I'm putting you on the spot. Let's see, what are some of the key themes that are running through the market at the moment? If you can put it in the question panel, that would be really good, just to see a sense of whether you're understanding what's going on. Okay, what's the key themes going on? What's been the key theme that's been running through the London session that we're just about to finish, that we're just closing, the morning London session? Okay, there's a silence, and the predominant theme that's been running through the London morning session has been Brexit headlines. The UK is in a situation where it's trying to leave the European Union, and yesterday there was increasing pessimism that Britain wouldn't be able to actually secure a deal with the EU before the November or even December emergency EU summit meeting. And as a consequence of that, the pound was under pressure. And so today, there's been some new news coming out that's saying, actually, a PM state spokesperson has said that the cabinet could well be summoned on Wednesday to sign off a deal. So all of a sudden, what we're seeing some bullish pound sentiment on the back of an EU deal. So straight away, we know there's some pound strength in the market, and it's due to Brexit headlines. Okay, so first of all, we can see, okay, positive Brexit headlines is a key underpinning for pound strength. So we know we have some pound strength in the market. Now, what else do we have? Now, we look back a little bit further, and even first thing this morning, we had some information from the Italian government who said that they are maintaining their budget deficit of 2.4%. So the big picture here is Italy has had a new government elected this year. They've decided to submit a budget to the European Union, which is running at a deficit. So in other words, they're going to spend more money than they are actually earning. They're going to spend more money to the tune of minus 2.4% of their GDP. Okay, so the EU obviously don't like the Italy doing that, and Italy has been told, can they change their budget deficit? And Italy have said no, they won't. As a result, there's been pressure on the euro. So we've got pound and euro. So there's pound strength and there's euro weakness. Okay, so that's straight away what we see. Now, going back even further to the overnight Asian session, there was some positive news out for the US-China trade war. There's a number of high-level meetings that are due to take place, and there was some positive news out of the US that those talks, were being positively viewed, and that ended up in the Australian dollar appreciating. Now, what you have to remember is the Australian dollar is so closely linked in with China's economy. Approximately 30% of Australia's GDP rather is linked to its trade with China. So if something's good for China, it is by definition good for Australia as well. So when there's positive sentiment for China, that results in the Australian dollar being bid. So we had some Australian dollar strength as well coming into the market. We also continue to see some US dollar strength from yesterday's US session. There was considerable dollar strength across a basket of currencies, and there was a lot of falls in equity markets. Now, the slightly difficult thing about today is that yesterday was a US holiday. So as we're coming to the market, what we're really trying to do is we're trying to gauge how is the US going to respond to what happened yesterday while the markets were on holiday. There was some large falls in the US equity markets. So let's just show you some of those here. You should be able to see that. Yeah, so the Dow was down 2.32% yesterday in the US session. The S&P 500 was down nearly 2% as well. The Nasdaq was down a whopping 2.78%. That was largely driven by a fall in Apple shares here of minus 5% over concerns on a lack of demand for iPhones. One of their biggest customers reduced their orders, and that weighed heavily on the Nasdaq. So some big moves in the US equity markets overnight. So as we're coming into the US session, there is, as we speak, a kind of sense of uncertainty. How is the US market going to react once it arrives? Now, as we're looking at the S&P 500 futures, we can see here that the S&P 500 futures, which is ES equals F, that's the S&P 500 futures, is up 0.6% at the moment. So it's going to be interesting to see how the market opens. But for now, we can see, if I said to you now, what would you say the most recent sentiment is in the markets at the moment? What would you, which currency pairs would you be looking at trading based on what I've been telling you? Okay, so which currency would you expect to see some strength in during the next session? See if you can answer that in your questions. I'll give you a clue. The UK cabinet could be summoned to sign off on a Brexit deal tomorrow. Okay, so the UK cabinet looks like it could be signing off on a Brexit deal. Is that going to be positive for the pound, or is that going to be negative for the pound? What do you think? Yes, well done. Yeah, yes, Nadir. Blondie, excellent. Yes, that's it. So, and one of the currencies we want to look at is pound strength. Okay, so we're looking at pound strength. Now, we're also potentially looking at euro weakness. Remember, I said that the euro is under pressure because of the submission to the to the EU from the Italian government, that it was going to submit a minus 2.4% budget deficit. So we can see there that euro is looking weak. So all of a sudden, we're starting to see that actually, okay, a pair that might be interesting for us to trade. Remember, you always want to pair up a strong currency with a weak currency. Okay, so looking at that, we could look at pairing up the euro and the pound pair, because we're expecting the euro to be weak and we're expecting the pound to be strong. Okay, we're looking euro to be weak, pound to be strong. Now, that's us looking back. We've also, now someone else has said, Sachin, yes, the China tariff by the USA. Yes, so that positive data, so the general narrative behind the US-China trade war is that the US has been threatening to put and has started to put tariffs on Chinese imports. There's about $500 billion of Chinese imports into the US market, and Donald Trump has been threatening and putting tariffs on those imports. So the question is will they be able to resolve those trade tensions, or will they increase? Overnight, there were some positive signs that we're heading towards a more conciliatory and more cooperative perspective from the US to China side. So that resulted in some Australian dollar being bid. So again, we can see some Australian dollar strength. Okay, so Sachin, you're right there, that because of that China tariff issue, we might see some Australian dollar strength. And what other currencies we're already seeing that we might see some euro weakness? So the euro Australian dollar pair may be interesting for us to look at as well. And of course, with the pound strength, the other pair to look at is the pound dollar. So we can have a quick look at the dollar index, a quick proxy to see how the dollar is doing so far. Dollar index is currently down 0.21%. So the dollar index is kind of the cumulative positions of the US dollar. So that index is down, and that gives us a sense that the US dollar is under pressure. So a pound US dollar position along makes sense as well. Now we'll cover that again in a minute. But do you see what we're trying to do here? So what you want to do is, when you come down to the market, is look back in a similar way to what we did there. Now, the way you practically do this is, obviously you may not be completely absorbed into the market, so you might struggle to know how to actually find this information. The way you find this information is you go to see like trading news wraps, session wraps. You look at summaries of what's happened in the markets. So I'm looking at HYCM, and if we I'm just going to, let's just build this across over here. So we'll look at some of their information, and you see the market outlook. If you go here, you can see there has some daily market review. You can click on that, have a listen to that. You've got some recent news. You see here a subdued US price action helps stage a modest rebound after the overnight slump. Italian budgetary concerns might continue to keep a lid on the pair. Okay, so you can see that there's some reference to there. And if you go to today's commentary, you can read the full commentary there. So that's like a starting place for you to look, and you will find what you find easiest. There's lots of different analysts' reviews out there who provide a summary of what's happened in the last couple of market sessions. Okay, so that's the first thing you do when you come to the market. You're not looking at the charts, you're not looking at where price is in terms of support and resistance. You're identifying the correct pairs to trade. Could you just let me know, is that making sense to you? Does that idea of looking back, identifying the sentiment, if you're struggling to understand what sentiment is simply the mood of a market. You know how everyone has, you might have some relatives, some relatives are in, when they're in a good mood, when they're in a bad mood. It's kind of easy to tell with your family what kind of mood they're in, okay, because you know them so well. Well, in a similar way to the way you know your family, as you start to get to know the market, you can see the mood of the market. And there are certain moods which are predictable, which are repeated, like risk-on markets, risk-off markets. You can see how the mood affects an individual currency pairs, okay? So, can you just let me know, is that making sense? Yeah, Blondie, thank you. Okay, you're getting that. The rest of you guys, you're getting anyone confused at this stage? You're getting that idea, okay? Excellent. Okay, now we're going to do another little test for you guys. We've looked back. Now we want to look forward, okay? So as you look forward, we always want to see what's coming, okay? Is there an anticipated event coming up? The reason we want to do this is because if we enter a trade right before a big news announcement is going to be released, we can easily end up losing our position unnecessarily, having slippage on the outcome of a surprise news event, which just moves price rapidly. So we want to always look forward to see what yeah, okay, yeah, Medina, you're right, it does make sense, but it is going to take time. Now this does take time, and the best thing you can do, Medina, is look at the summaries of the market wraps each day, okay? And as you look at it each day, you see the market tends to have recurring themes. So it doesn't pick a new topic every single day. So if you take the Brexit, the fact that Britain's been leaving the European Union, that's been going on for months. So when you sort of tune in to these themes, they end up being repeated. So it's not like you're having to learn new information. At first, it's a whole lot of new information. So it's daunting at first. But as you spend time immersing yourself, Medina, you will soon see that it's not as hard as it seems. But the key thing is constant immersion, dipping your toe in and seeing what the mood of the market is. Okay, yeah, good comment, well done. Okay, so looking for key upcoming market events. Okay, as we look forward today, is there any anticipated event coming up today? Let me know, guys, in the questions. What do you think? Is there anything coming up today that when you look at the trading calendar that you think, oh, that's a significant market event? Okay, I'm gonna help you. I'm going to bring the calendar over in front of us, okay? So here's a calendar. We have the important upcoming events. This is Tuesday, November the 13th. We are now here, just around, that's the next event. We've got an FOMC member speaking. Do we have anything that is particularly market moving? US budget statement. Okay, yeah, maybe of interest, Nadia. It's not necessarily going to be a massive market mover, something to have on your radar. Also, the FOMC member Brainard speaking. It's good to see whenever an FOMC member speaks, but not necessarily something that's going to be a big move of the market. But yes, have it on your radar. Anything else? So there's nothing really significant that's coming out today. Okay, so there's nothing that's particularly highly anticipated. There's nothing in particular that is expected to have a big impact in the market. So as a result, that section, you can think, okay, there's nothing necessarily to be aware of. Okay, Brainard speaking and Daly speaking, so something to be aware of. Although Daly was speaking yesterday as well, he's probably going to repeat what he was saying yesterday, so not necessarily expecting anything new from him. The budget statement is that's not really particularly a market moving event, so you don't need to worry too much about that. The key, as it were, is when you see these 3-star events. Okay, these 3-star events, now they're not always the case. So a good example was the average earnings today, and the average earnings excluding bonus for the pound. They came up higher than expected, and a really good result for the UK. But of course, because of Brexit headlines, the market is really focusing on what's happening with Brexit at the moment, rather than necessarily looking at anything else. So that's that situation. So we've looked forward. Okay, now you see, now you've got the confidence. You know, okay, I haven't got anything particularly massive that's going to be coming out later today. Okay. So now we start to look at the charts, okay? And this is the part where we start putting it all together. So it may surprise you, but you only really want to be looking at maybe 1 or 2 currency pairs, okay, for each session. You don't want to be looking at, 10, 15, 20 different pairs. It's very hard to organize yourself. It's very hard to arrange how you're going to trade and organize yourself with such a broad variety of currency pairs. So we start to need to get specific here. And we looked at some options, didn't we? We looked at pound, US dollar. Okay, so we looked at the pound US dollar as being a good pair. Potentially, do we want to buy the pound US dollar, or are we looking to sell the pound US dollar? Just to see, let me just check your understanding. Which one are we looking for? Okay, guys, pop it in the questions. Do you think we'd be looking to buy the pound US dollar pair or sell the pound US dollar pair? What do you think? Yeah, buy. Well done. Yeah, Nadir, yeah, that's exactly what we want to do. We'll be looking to buy the pound US dollar pair. And we also said about the euro pound pair. Now, do you think we want to buy or sell the euro pound? So remember, euro we're expecting to be weak, pound we're expecting to be strong. Are we wanting to buy or sell? Yeah, good. Medina, excellent. Well done. Yeah, that's very, very good. Sell the euro pound pair. Okay, so you can see now that you've developed that bias. So now let's go to the chart. And as we go to the chart, remember just call up the guide. There it is. So remember the chart. If you've just joined us, remember the workshop guide is on the handouts tab on the right hand side of the GoToWebinar control panel. There is a handouts. Click on handouts if you've just joined us, and you'll see this workshop guide here. And we've already looked back, we've looked forward, and now we're looking at the charts. Okay, we've developed a bias for certain currencies based on your sentiment analysis. So you could print this out and then you could write next to it the pairs that you're looking to trade. How does the sentiment marry the fundamental outlook of a currency? So in other words, what that is designed to make us think is you might have a short-term sentiment that's strong, but you might have a longer-term fundamental outlook which is weak. So you have to be aware of that, okay? So for example, the Australian US dollar pair, the Australian dollar rallied on the strength of the positive Chinese data last night. But actually, when you look at the rate differentials between the Australian dollar and the US dollar, longer term, the Australian US dollar pair is looking like a sell. Now, it's a little bit debatable, obviously, because everything is in the market. But the obvious outlook is it's a sell on the Australian US dollar longer term, but the shorter term sentiment was long. So you have to be aware where there can be some conflict. Okay, pair up weak and strong currencies, write them down. So you put them there, and now we look for key technical places to enter. Okay, so if you would like to open up your charts, let's look at the pound US dollar pair first and foremost. Okay, so let's go to the pound US dollar. If you open it up, there we go. Okay, so here we have the pound US dollar pair, and we're looking to buy. Now, first of all, let's just have a look where it is. Okay, so we're in a large range between 1.3300 and 1.2500. We're roughly in the middle of the range on the daily chart, so there's kind of room to roam either way we want. Look at the 4-hour chart. So we can see that price is beginning to approach some key resistance levels here. Look, on the 4-hour chart, we can see that we're getting some big resistance here. The 1-hour chart, we're getting some larger resistance here. Okay, and now what we have to think with the pound is Brexit is seen as a one-step process. Okay, so it's seen as if Theresa May signs a Brexit deal with the EU, the deal's done. No, it isn't. Because although Theresa May might accept a deal from the EU, Theresa May then has to take that back to her parliament, and parliament has to agree to that deal before it is accepted. So it's a two-step process, okay? So now what's going to be happening is the market is going to be analysing really what's going on. So we saw the strength of the strength in the pound here. Okay, so it's around here where we start getting these positive outlook for the pound this morning. Okay, so we saw a few spikes. Let me just show you on the 1-minute chart so you can see these spikes. Okay, so that was a spike there where it was saying that it looked like the Brexit deal was going to go ahead. There was something came over on Reuters, and it was expected that a Brexit deal was going to be advanced. Okay, so you can see that so far the 50 exponential moving average has been respected. It was respected again there when it tested that region. So the pound is currently going up, but you can see it's going up into these resistance levels here, and that is significant resistance. Okay, and when you bear in mind that the fact that Brexit is a two-step process, the fact that Theresa May is going to agree, has to agree with her parliament as well, the market is going to take a pause, because what the market really wants to know is, will the deal be accepted by the UK Parliament? And that is going to be the question that it's going to be really wrestling with now. So what you would want to see before initiating any trade here is you'd want to see price breaking up above that 100 and that 200 exponential moving average on the 1-hour chart. Until price sort of breaks up from there, there isn't really technically a very sensible place to enter. Okay, the only place that could be sensible to enter would be a retest of that 200 moving average on the 15-minute chart. Can you see the way that the moving average provided support there? So it provided support here, support there, and so a return back down to this level, this 200 moving average, would offer like a low risk, potentially high reward place to enter. So if you were entering a trade, you would put a buy limit order in, you're buying on limit, you want to be a few points just above the 200 moving average, you want to put your stop just sort of a good distance below the 200 moving average, so do it about 10 points below. And let's see, so let's see, go about 10 points for 2.9, so let's go at 2.9, about 10 points below, a little bit further, just about 10-12 points below. So if price then does return, you can see that that is a good low risk, high reward place to enter, to look to play back to the upside. The other thing to look at is, as this plays out, is how does price react around this 200 and 100 moving average. Again, see if you see price break above the 100-200 moving average, then it's indicating there may be more upside ahead. Okay, and then on the 4-hour chart, you've got again these 200, 100. So we're in a key place of resistance now. Okay, so it's not the best place to initiate a new long trade. Okay, So let's now look at the euro pound pair and see if that's in a slightly more technically better position for us. Okay, so we're going to the euro pound. Okay, so we all identified, didn't we, that the euro pound was a clear sell. Look, you can see how the market is confirming what we're analyzing. We're in a clear downward trend on the 15-minute chart. Let's have a look on the daily first and foremost. Okay, so that's interesting. Okay, very interesting. So on the weekly, we look like we're breaking through a 100 moving average. You saw there was some resistance there last week. There's often some technical resistance from these levels. And now we see price moving to the downside. And we see price threatening these lows. So this is a good place for us to look to short. Okay, so you can see, look, on the weekly chart, there's plenty of room to roam there. So the next obvious target is that 200 moving average. Okay, so there's room to roam. We've got some resistance there from this swing point. So that would be a first target. You can see the price is moving down into this zone. So as we go to the, let's have a look on the 1 hour chart. Okay, now we want to look at sensible places to enter. Okay, so if you have the euro pound chart in front of you, tell me, where would you see a sensible place to enter a short trade there? What kind of factors would you be looking at? What issues would you be looking at there we don't want to sell? Yeah, we know we want to sell. Okay, what about long-term resistance on 1 day? Okay, so we're looking at the one-term. Okay, what's selling from there? Nadir, is that what you mean to sell from this position here, the 0.8700-ish level? Yeah. Nadir, is my understanding correct there? When you're saying a long-term resistance on the 1 day, here's the daily chart. That is a key resistance level here. Is that what you're talking about, Nadir, as a good place to sell from? Okay, let's have some other ideas. Where would you be selling on this chart? We're going to go down to the 1 hour chart. Where would be a sensible place to sell? How would you go about looking at that? Not me. Okay. All right. Okay. Well, some sensible places to sell is you want to look at places where moving averages are, and you want to look at places where pivot points are, and you want to look at Fibonacci retracement levels. Okay, so we're going to start to look at that. That was okay. Oh, okay, no problem, Medina. That's no problem. Okay, right. Okay, so having a look at this euro pound, we know what we have a bias to sell. So we're going to put the Fibonacci retracement here. Okay, so we can see from those recent highs down to this low. So key areas where we want to trade from are areas where we have lots of where we have confluence of different factors. Okay, so we have a confluence of factors at the 50% Fibonacci retracement level. Okay, and there it is just at the same place as those 50 and 100 exponential moving averages. That is a potentially good place to sell from. Similarly, we have the 61.8% level is quite a good level. You have all those resistance levels up here. To see the resistance levels across, we could equally draw that resistance level in there. So you have some resistance there, it's there. You have a little bit of support turned resistance here and here. So entering again at that level would be a good place. And then obviously you could put your stop quite tight just above that 200 exponential moving average. So if I was looking at trading this pair And again, I would say that the danger with the Brexit situation is the headlines move the pair. So that's a slight complication with this currency pair at the moment, is you wouldn't want to just leave your orders in place because a headline any minute can send the pound moving very quickly. But let's just use the example because it gives us a good place. So we can see there's a key resistance level there. We have the 61.8% retracement level, and we have the 200 moving average as a logical place to put our stops just above. So when you put that all together, you could sell your limit, put your limit order in there, just put it just at the 61.8% level. Then we'll put our stops just above the 200 exponent moving average, and then we will want to take profit back down at these lows, so around the 0.8700, just above would be a sensible place. 0.8703. Remember, the big round numbers tend to be respected, so that would be, you know, a reasonable trade setup. You've looked at the sentiment, you've looked at the technicals, and you can see where you want to go from. Okay, so let's go back now to our handout. Look at your risk. That's a very important aspect. You remember, in terms of your risk, you won't want to be using any leverage when you're trading. I'm a big believer in this, and especially when you're learning to trade, it's going to help your trading psychology if you don't use leverage. So what not using leverage means is this, okay? Say you were trading you had 10,000 US dollars in your account. If you were trading with 10,000 US dollars in your account, that will be your lot size. Okay, 0.10. So that's one mini lot. Okay, that's what it means to trade without leverage. Okay. Another example, say you have $100,000 in your account, then you'd be trading with one lot at a time. Okay. And if you were trading with, say, $1,000, you will be trading with one micro lot. Okay. When you're trading in this way, you're trading without leverage. In other words, your trading position size is equivalent to your overall account size. So your trading size is equivalent to your account size. That's what it means to trade without leverage. So make sure you are risking in that way. It will help you. It will help you trade longer term because you will be a lot less emotionally affected by your trades when you're trading in that way. Are you trading professionally? Again, we've gone through how we analyze trades. We don't just flick up the charts and start trading away. We analyze, we identify our risk, we look for key sentiment, we're looking ahead for key news, and then finally look at the outcome of your trade. So when your trade ends, you then spend some time to think, well, okay, did I follow the correct process? And this is the time to be honest. So if you said, oh, I just entered a trade because a trade was at a key resistance level and I just entered the chart for any reason, you need to say, and then why did I do that? Or did you enter a trade and then immediately enter another trade in to get revenge? Or maybe you risked too much, and because you risked too much, you decided that you needed to risk even larger trade to try to make up the money that you risked. Okay, these are the kind of very common questions, that common problems that people have. Okay, so you need to look at the out. Did you follow the correct? Why not? How do I learn from what you've done? Remember, trading involves mistakes. It involves lots and lots of mistakes. It involves wrong calls. And that is the nature of trading, is that you cannot win every single trade because you are by definition taking a view on the currency pairs in a certain direction, and you're not always going to be correct. Okay, so you can't control the outcome of your trade. You can't. But what you can control is the process. And if you stick to a good process over time, the outcomes will get more beneficial for you. Okay. So that is how we're looking at the markets today. So just one thing to say with the Brexit news is you need to be really tuned in to those headlines. So, for example, I've got a Squawk that I use, and I've got the Reuters and the Bloomberg's feed, so I see the news as it comes out. Now, many of you won't have access to that, but if you're looking at trading seriously, what you want to look at doing, you really want to consider getting a new Squawk. Yeah, so it's live Squawk or ran Squawk, and that does keep you in tune with the sentiment of the market much more easily and readily. So you know that is a service. Yeah, that's fine. Your question: how many trades can you trade at a time at 0.01 micro lot if your account is 1,000? So what I would say is you can have no more than have a maximum of 0.08 micro lots open at any one time. Yeah, that would be sensible. So you could have 4 different trades on up to a maximum of 0.02 per trade. That's what I'd say. So a maximum of 0.08. So you could have 2 positions, for instance, on the same pair. Okay, but no more than that. That's the max. And that's what I would say. So yeah, you're looking at a maximum of 0.08. That's when you're maxed out. Okay, 5 trades. I think 5 trades are starting to get. You're starting to push it there. I think 4, 5. 5's okay, but just be aware of that. Okay, that'll keep you on the right kind of side of things. Okay, that's good, excellent. Okay, we're now going to go to our added extra bonus. And the added extra bonus is 3 ways to trade a surprise news release. Okay, so, right. Here we go. So let's look at the recent example we had today, which is the pound US dollar pair, because although this wasn't a surprise news release, it was a surprise news event. Okay. And we can see what we noticed earlier, that the pound was heading into some key resistance. So we saw that, and we can see, and now we see that. You see, this is where it's helpful, isn't it? Because that has provided some key resistance there, and the key information now will be: is the British cabinet and is the British government going to accept a withdrawal agreement? So that's really what the market's trying to factor in. So we've kind of had the positive news at the pound for now, and in 13 minutes that candle will close, and if it closes like that, that's going to be a clear rejection of the 100 and 200 moving average. So that's something to be aware of. But let's look at that surprise news release that we got here. Okay, there's 3 different ways to trade it. Okay, now the nice thing about this is that it gives us 2 ways. Okay, so the first way to trade a surprise news release is simply to enter the moment the surprise comes out. Okay, so this was the surprise candle here, and basically the surprise was that suddenly it looked like Britain was going to be able to get into a November summit. Okay, previously it had looked like not possible, but now all of a sudden the UK government came out saying, yes, we're closer to a deal than we were on Monday. Okay, so all of a sudden there have been a number of little mini leaks coming out during the day. Some political editors have been saying some comments, but this was the final, the cherry on the top. Yeah, kind of we're closer to a deal than we thought. Okay, so price rallied rapidly. Now, the first way is you just enter at market. So if you entered at market, you could have entered as soon as that information was released. Okay, you enter there, say you got in at the top, say you got the worst fill, you enter there, and you obviously want to know that it's so say you got in here at 1.2955. Okay, so you got a bad fill. You could have then looked and you would have put your stop below the news candle. So you entered here, your stop is below the candle, because what you're thinking, if this is such surprising news, the market price shouldn't go back down below it. Do you see? If this news is so good, you put your stop underneath the candle of the news release. And then you're typically wanting to target, 30, 40 points. And what you would have done here, you've gone to the 1 hour chart and you would have seen, look, this is your obvious target here, the 100, 200 exponential moving averages on the 1 hour chart. Okay. So if you entered that on, on the 1 minute chart, right? You entered it there, it's 12:30. As soon as you hit into those key levels here, that's when you would have taken profit. There's no point getting greedy with that. So that's the first way to enter a surprise news. The second way is to wait for a retracement. Okay, and the most obvious way to wait for a retracement is you draw your Fibonacci retracement here, always from left to right. So you start from the left, draw it to the right, and then you're looking for like a retracement down to the 50 or the 61.8 level. So you can see that as soon as the candle was finished, price retraced down. You can always just put in a little key. That's always a good place here. We see that mini little resistance on the 1 minute chart. You could have just entered there, stops at the below, and you could have targeted up to the recent highs somewhere around here. Would have been a simple scalp, and you would have made just 15, 16 points, but that would have been a sensible place to enter. It's exactly the same principle with larger news releases. So we'll go to another large news release. Let's look at the US dollar Canadian dollar pair. This happened at the end of last week. That was a good one to show you as well. There we go. Okay. So what happened here? Okay, this was there was a lot of pressure on the Canadian dollar at the end of last week, and the pressure was as follows. The Federal Reserve had met and saying that they're still carrying on their path of rate hikes, 1 in December, probably 3 in 2019. So that was dollar strong. The oil market had been continually falling, and as a result of that continually falling, the Canadian dollar had been depreciating. Okay, so the Canadian dollar was weak because of the falling oil. Remember the correlation between Canadian dollar and oil? Because someone tell me, what's the connection between the Canadian dollar and oil? Can someone tell me on the questions? What's the connection? Whenever you're taking a trade on the Canadian dollar, what chart must you always look at? Let me know in the questions. Yes, that's correct, Nadir. Oil, exactly right. Whenever you're taking a trade on the Canadian dollar, you always want to have a look at the oil chart, because oil and the Canadian dollar are very closely correlated. So when oil is appreciating, the Canadian dollar is appreciating. When oil is depreciating, the Canadian dollar is depreciating. And in fact, the US dollar Canadian dollar pair has a 96% correlation with oil. So literally, you always want to be, whenever you're trading the US dollar Canadian dollar pair, always have an eye on what oils. If you don't understand what's going on with oil, you could make a very foolish trade on the US dollar Canadian dollar pair. So here was an example where we had the oil was falling, so we knew that the US dollar Canadian dollar pair would likely to be rising. Okay, and this candle was some news about the USMCA, the United States Mexican Canada Agreement, formerly NAFTA. There was some controversy over some of the ways that it had been organized, and it was the ways it was being applied. And the bottom line was essentially that some people felt that the US was applying it in ways differently than Canada had expected it to be applied. So this resulted in further Canadian. So there are 3 reasons for Canadian dollar weakness and US dollar Canadian dollar strength. Okay, so there we have a very positive picture. Now, if you were looking at entering here, how would you have decided where to enter? Okay. How would you have decided how if you just saw this? You could have entered at market. I would have felt uneasy because it's not massive news, so it's something you definitely want to enter on a retracement. Okay, so again, you got your surprise news release. You draw your Fibonacci retracement level from left to right. Okay, and now you have a look. Is there any key sort of resistance levels? Look there. So there's a key level. Look, it chimes in with a 38.2, and there. And this is the entry that I went for, which is here. I went for the 61.8 entry, and my order wasn't filled because obviously the price didn't retrace that far. But that was my logic and my reasoning there, just down to that level. And my stop was just running below the lows. Okay, so that is where you would have looked at entering there. So we've covered two ways to trade a surprise news. One is you just jump in. Okay, as soon as the news comes out, you just trade it. And that's very short term. You're looking for that short term spike. Just take your money and go. 20, 30, 40 points. When you've got it, just go, unless it's a huge event. Secondly, trade a retrace. Draw your Fibonacci retracement. Look for key support resistance levels. Look for pivot points. Look for areas where there's confluence with the moving averages, and you can use that to get as close a stop as you possibly can. Okay, the third way is when you're looking to enter before a news release. Okay, so let me show you an example of this for this week. So for this week in our weekly look ahead, oh, hang on, let me just go and grab it. Oh, hang on, I'm having trouble getting it across. Try one more time. Hang on, I think I've just got to, that's it. Right, that's it. Now I can get it across. Yeah, there it goes. Okay, so as we're looking the week ahead, we go to tools, we go to economic calendar, and we knew that the euro was under pressure. Okay, we covered those budget woes, and the other issue for the euro has been growth. It started off the European Central Bank saying that the European growth is just not a downturn, but just a loss of momentum. Well, the growth seems to be slowing even more. And on Wednesday, we've got some GDP data that's expected out from Germany, and expected out at minus 0.1%, okay, versus 0.5% previous. So this is indication Germany is the Europe's largest Eurozone member. So what happens in Germany is very significant for all of Europe. So we've got that. It's expected to come out low. Okay, so we knew then in advance that we knew that growth is being weighed on in the euro. So you could have thought, well, let me enter into some of this euro weakness on Monday's open. You could have thought, you know what? As I look at the weekly chart, I can see a weekly candle here, and I think there's going to be some selling pressure on the open, okay, into Wednesday. So you could have bought in anticipation of the news event and then take your profit sometime before the release on Wednesday, because obviously the release may come out differently. But you see at the moment, you've got the expectation of the release. Okay, guys, I hope you found that helpful today. I've really enjoyed going through a lot with you, and I've tried to make it more active and up to date. There's a free webinar that we do on each, it's not the 12th of November, it's going to be on the 19th of November. There's a free webinar when we look at the most significant events coming up. Yeah, good. Yeah, okay, pivot points. Yeah, the key thing with using pivot points is you need to have the correct sentiment and fundamental bias. Yeah, once you start getting the correct pairs to trade, you'll find that pivot points will start to become more useful for you. So keep working on your sentiment analysis, yeah, okay. That's the key thing to practice. Blondie, I'm good. Yeah, Rico, I'm good. What do you think about gold and euro, Giles? Blondie, I'm sorry, I haven't got time to talk about euro. Blondie, I think euro is under pressure at the moment, and euro growth is slow. We have the Italian budget saga, we have Brexit blues, all of that's weighing on the euro. Can it keep going down? That's what the market's asking at the moment, and it will depend on what the US do in terms of euro, US dollar. And at the moment, Draghi is saying we're going to end QE program at the end of December, and we're going to hike in the summer of 2019. Any deviation from that, if that gets pushed forward or pushed back rather, there's going to be more euro weakness. Blondie, okay, yeah, okay, great. I've got to go. I've got to cover a US session that's coming up. Guys, I'm glad you found that. Yeah, Nadir, very, thank you. And please do, can you just get in contact, guys, with the topics you want, because I really want to help you. I really want to make this good for you. And thank you as well for your comments. The way you've all asked questions has been really good, and you've really asked really intelligent questions. So please do email suggestions for topics that you want covered here, workshop@hycm.com. I really want to hear from you. I want to hear what things you need, and that would be great. Great, Medina, lovely. I look forward to seeing you. I'll look out for you, Medina. Thank you. Yeah, that's great. Okay, guys, it's been lovely spending this hour with you, and I look forward to that we come back again, same time. Next week, we have the same thing, okay? Just as at this time, where is it? I haven't got the time on it. The workshop is the same time. It's 1 GMT to 2 GMT on Tuesdays. So I look forward to seeing you again. Thanks, guys. Have a good time now. Hope you have a good week. Trade safely. See you again next time. Bye.